Just checking my microphone, guys. Here we go. I'm switching to this one, so the sound should be good. And I think we're good. Okay, cool. And let's share my screen. Yep, there we go. There we go. Here we go. So, hi everyone. Hello, hello, hello. Obviously, I want to make sure that you can hear me. So let's make sure that we'll do that. All good? Cool. Cool. All right, so welcome everybody. Thank you very much. Let's have a quick look at what economic news is coming up this week. So, should you, as a end of day trader, worry about, focus on what's going on with the economic news? No, I don't really think you do need to focus on it too much. I think that just being aware of what's going on is always a good thing. But I think if you're a day trader trading on the lower time frame, so anything under 4 hours, you need to be aware of any news coming out during the week that could create a surge in price, which could possibly, if you're about to get into a trade, you don't want to really do that. Okay, so again, what the news is doesn't really matter too much. The only time that the news figures might be important is when we're sitting in an economic crisis and we're like, what do the jobs numbers look like? Are we recovering? Is it getting worse? So really only when times are very, very bad. Otherwise, the only real reason to care about the big news is because it might disrupt a really good trade setup that you've got. So you want to stay out of the market when you do that. It introduces randomness into our trades that we don't want. So we want as many odds in our favor when we take a trade. So by avoiding the news, ideally price will continue to do whatever it is that we think it's likely to do. Okay, so excuse me. Again, I'm fighting off a cold, but I've had this for about 10 days now. It's just terrible. Okay, what was I going to say to you? Okay, so first of all, this week we've got Bank of Japan. Again, as I said, nothing here actually matters too much to us. It's only if it's going to disrupt. Now, we had non-farm payroll on Friday. That was the big one. We've passed that. So now we've got $1.30, I would say. This is UK time. So tell you what I'm going to do. I'm going to switch it to Singapore time for the purposes of all you lovely people. You guys come back later, so we'll do Singapore time. Okay. So that's 9:30. We'll have US news coming out. I find at the moment with crude oil, we're going to have a look. Crude oil is one of those really cool trades. It's probably going to happen, probably as close to a sure thing as you can get. Let me say that again, as close as you can get to a sure thing, but not guaranteed. Nothing's really changing crude oil's futures right now. I think we're not as dependent on crude oils as we used to be, and therefore nobody really worries about it as much. Not to say crude oil isn't being used, but we're just not as dependent on it as we used to be. This is an amazing thing, by the way. It's a really good progress for civilization. And I have a very quick question for all of you. Before we were dependent on crude oils, do you know what we used to live off? So we had coal, so there was crude oil, and we had coal before that. So our trains were coal powered and coal stations, and we had all that. But before coal, do you know what we used to depend on for to light our fires, to light our engines and everything? Curious to know if anyone knows what that was. Okay, while we carry on for this, while I wait for some answers on that, the euro, we've got this one. I think the interest rate is worthwhile knowing if that's going to happen. So interest rate decisions are I would say, would be the single sort of biggest things that could move the markets, and that's actually because they can change long-term trends. So especially if it's a big jump or if it's a sign of panic. But I would say this is that for the most part, they tend to follow the US. They tend to. So if the US is lowering interest rates or putting them up, so are other countries. They tend to want to. This is kind of one of the things that happens. And this is one of the things that I love most about being in Bali, as sick as I was. I feel like I'm sick all the time, which isn't always the case. But when I was in Bali, we had all these amazing speakers, and the kind of knowledge dump that you get about all kinds of strategies and about the markets and asset classes. One of the things that came out of that was understanding why the interest rate decisions are really one of the most impactful things, why they can impact the stock markets, why they impact the bond markets, and because they have to do with lending and profit. And so they have a big impact on that. And then we've got jobless claims. GDP out of the UK. So although those are things that can really move the markets, I think probably the most interesting one would be if there is an interest rate decision, possibly out of Aussie or Euro, that could possibly change things. Okay, that being said, let's go back to the market. So I haven't seen any responses as to what the fuel source was before coal, and it was whale oil. So you know that we used to whaling was the biggest thing. It was really only after kind of crude oil was discovered that whaling was kind of given up. Whale oil and whale fat was the source of all of the energy we were using back then. That was what we used before we discovered it. Anyway, okay. So the next thing we're going to do here, ladies and gentlemen, is I want to look at the global indices, but the very first stuff I'm going to knock out is going to be I'm going to knock out of our analysis, I'm going to knock out gold and crude oil. So first of all, let's have a look at gold. So what do we have when we look at the monthly? The monthly timeframes, the weekly timeframes, whether you trade on the daily, whether you trade on the 4-hourly, you do always need to know what's going on with the monthly and the weekly. You need to know what key levels we have and if there's any kind of significant price action. So what can we take away from this? We know that we've produced a swing high. We know that because we've got a lower high, lower low, but basically we've produced a lower low. But also what we haven't done, which is also important, is we didn't really close below the low. This is really where you want to close lower, because you want the market to signal that it really is committing to a change in a direction by closing in that direction. It hasn't quite happened, but we are very overextended. I think most of you know why I say that we are very overextended. If we measure from here to here, and then we go to the biggest gold bubble that I ever lived through so far, we were which was this period up until 2011. We're almost as far as that. If we kind of move it across to that and then bring it back, it kind of gives you a sense of that was definitely a gold bubble. And after that, gold lost its shine for 9 years, or was it more than that? But it for 9 years. So if we do go the same kind of distance here, we're looking at roughly about 28.50. And that would be the biggest bubble in my lifetime that ever happened. And after that, gold didn't get to a new high until 2020. Holy cow. So yeah, so solid 9 years. And therefore, I want to use that as a frame of reference. But that being said, when we go to this, we have started this journey and therefore we could get a bit of a correction. So breaking the low, breaking the low here would be significant. Okay, breaking the low would mean that we would start a movement down, and the 20, I want the 50 and the 20 to be your guide. We can look at price levels here. So we've got a price level of these highs over here. This is a beautiful level. This is a strong level of resistance, 2073. Price could come back and retest that. Could it do that? Yes, it could. If it did do that, what would the Fibonacci retracement from the biggest low to that be? It would be exactly a 618. So that would be acceptable. A 50 fib retracement, a 50 fib retracement on that would also be very acceptable, which puts us at around about this kind of area here, which is roughly, I'm going to put it where the 20 period moving averages. So the 50 would come up to here, the 20 would be in around about this area if that was going to be the case. Could we come up to the 382? Yeah, we could if we really had to. We could do that. So these are kind of the three areas where I think gold has that potential to retrace back to, and we could see that happen over the coming months. I think that's important that we have that happen if gold wants to come down. It's so funny because right now we think, well, it's so much on fire, how can it ever come down? And then when it comes down, we forget that we have the thinking that we have now, and we think, holy cow, how much further can it go down? And then 3 months after that, when it starts coming back up, we're like, oh yeah, it's going back up to the all-time highs, and we forget about the thinking we had before that. So this is why keeping a trading journal is so crucial, because you really want to kind of log what your mindset is when you take trades, because you learn from that. You want to understand, 5 years from now, when we have some other bubble, you want to be able to go, you know what, I've lived through a bubble, I know bubbles can burst, because you need that reality. It's got to be a good reality for you. You have to understand every market can crash. If gold can have a bubble and gold can crash, then anything can have a bubble and anything can crash. Okay, so that's really what I'm looking for here. If we go to the weekly, we have, and this is really the big issue, we have a lower high and we have a lower low. So price is technically still in an uptrend. A pullback here. There's a beautiful consolidation. Beautiful consolidation. And by the way, very important for the newbie traders, when you see a pattern that in hindsight is obvious, and you think, well, what's the benefit of seeing something in hindsight that's obvious? The benefits are real. For experienced traders, seeing a pattern in after the fact that you missed in real time will still teach you to see it the next time. It'll still improve your confidence. It'll still say to you, you know what, the old patterns work. It does a whole lot of affirmation stuff, your confidence and your psychology and your pattern recognition stuff. So what I want you to do is whenever you ever hear someone say, well, what is the point of hindsight being 2020? What is the benefit to us? Traders literally make their living. We make our money off hindsight. We make our money off patterns that have happened in the past that will happen again in the future. So identifying a pattern that you missed, but seeing it now is still good for your pattern recognition brain. Okay, just to kind of clarify that. Consolidation breakout, price goes up, price pulls back, we're still in an uptrend, we have a series of high lows. So what do we know about gold? We've got an uptrend, we've got a nice retracement, nice bullish candle here, but now it's not following through. So nice bullish candle, but no follow through. On the monthly, we know it's overextended and possibly looking to come back. So we've got a contradiction. We've got a nice, beautiful uptrend on the weekly. It doesn't look overextended, but it's not going anywhere. The monthly itself is very overextended. Could it be coming back? And then we go to the daily. So we've got two different contradictory pressures there, or pictures, excuse me, pictures. So we come down here, we've got this correction. What actually happened in this case is we broke this low. So we had a series of higher lows going up. Big higher lows. We even had a higher low here. Price came back to this, went up, failed, broke this low. So that broke the low here, broke the low here, and actually arguably even broke the low there. So multiple breaks, meaning that this uptrend that we see here is finished. That is finished because every trend goes through, or every market goes through trending up, trending down, going sideways. This trend going up is finished. So on the daily, we know that the uptrend is done. We then have a very messy lower low, but I'm not really going to put it there. We have a lower high here. So we have price goes to this high, then really down to this low, then we have a lower high, but we don't have a lower low. So if we break through here, we're probably going to go down. And if we go from here, then this becomes an uptrend. Let me just clear that up for you and then draw it again so that I can clarify. I want you to understand what's going on here. This is why I'm not trying to make your lives messy. I'm trying to make it more for you. So if we go below here, then we have a downtrend because we have this particular pattern here. And if we break up here, we have an uptrend. So basically we're waiting for the monthly to decide if it's going to come down or for the weekly to decide if it's going up. And this will happen throughout your trading career. It'll happen from time to time. So how we handle it and how we analyze it is a good thing. So what does it mean? It means there's nothing for us on gold until we break this high or break this low. Does that make sense, guys? Wood. You know what? Wood is true. Wood, we could have used that to power trains and everything. But yeah, I guess what I wanted to say was why whale oil was so important and why we used to do so much whaling was because at that time, that was the stuff that lit all the lanterns at night and it fueled everything. And that was, I thought that was very interesting because we all know about whaling, but most people forget that that was really why. Before crude oil, that's what we lived off. It was sort of the biggest burner. It was the best burner. Anyway, okay, so that's gold. Let's go to crude oil. So basically gold, leave it alone until there. Now, crude oil is looking very interesting. And crude oil, you need a monthly perspective for sure. And then we'll go to that. So we'll go to the weekly. We go to the weekly. We've got a couple of levels here I just want to kind of pay attention to. Let's go here. Let's pay attention to those levels there. Just that kind of stuff there. And then we start to look at a few other things. Then we've got kind of a possible move over there. Let's zoom out again. And we've got, I'm looking at levels, by the way, where price has touched it from both above and below. So here we come from below and we're touching it from above here. So we've got all of that stuff. These are really the very, very big major levels that I'm focused on at the moment. And what do we have here? Well, we have a increasingly pressured downtrend. So this is a very bearish pattern. It's likely to break down. Right now, is it guaranteed to break down? No, but it is like 90%, 95% chance that it's going to break down. And when you think about it fundamentally, unless for some reason there was suddenly a reason to have a demand for crude oil, then I think it would break up. If it breaks up past this sort of high here and up through that the downward sloping trend line, then I would say all of this is negated. Otherwise, ladies and gentlemen, my expectation is that somewhere in this period of time, there is going to be a break down towards probably $40. Probably down towards $40. Why down towards $40? Because this pressure has been kept above this line since sort of 2023 January last year. So that's 2 years it's in there. It's probably going to run through till February or March or April 25. So a couple of years where it's basically been kept at this level, and the pressure builds up, and then eventually when it does break, it moves. So one of the things you'll learn about the markets is that when they are consolidating or tied up somewhere, when they do eventually break and move, they really move. So how do we trade this? This is where it gets a bit tricky, because this area is the danger zone. This area here is the danger zone. All right, because you can see it can break through here, ping pong around, it could do that. However, I think that there's a good chance we could break and keep going. But I want you to be aware of this. So how do we trade this? Well, when we go down to the daily, we have some other possibilities here, but you'll see we've got lower highs coming in here. So there's ways in which we can trade this. But the problem, the annoying problem, is that we don't really know when it's going to break out. It could honestly keep going until that's June, almost June next year. So somewhere between where price is now and there, we will get a breakout. And it could be next week, but somewhere now it's looking good. And how do we trade it? Well, there could be a couple of different attempts at a trade. Your stop loss could be here, could be here, could be here. So you can put your stop loss there or there or there. You probably want to break at the low or break below here. And then you're going to target all the way down. You definitely want to take some profit as you go. But I want crude oil on your watch list. I want you to check it every single day. One of the things you're looking for, so remember that my guys, my Spartan guys, we talk about a momentum candle. Okay, we talk about a momentum candle. We are looking for the momentum candle to come through here and break and close down here. We want that momentum candle. And then we'll probably start to get the move after that. But it looks really good. I'm very happy about that. I think there's some real good potential there. Okay, cool. Now let's go through the rest. Let's look at the global indices. Let's go have a quick look at the Dow. So we'll start with the Dow here. We'll quickly get a sense of that. What's going on? All right, so the monthly is starting to go a little bit parabolic. We're sort of going like this, and then like this, and then like this. I don't think we've gone like that yet, so we've still got some time. And it's a monthly chart, so we've got a year or two or more before the market really gets into some trouble. It's starting to get a little bit overextended away from the moving averages. And we look at the weekly. The weekly is sort of at the top of its channel. So if you had a channel, I never really use this. How do we do this? So it's something like this, and you kind of would have to move it down and something like that. Bring it in, something like that. It's getting up towards the top of the channel. And at some point, I expect to see a bit of a pullback towards the 20-period moving average. So we're starting to head into a bit of overextended territory. That actually makes some sense. Let's go to the daily. So what I need to see bearish divergence. I need to see bearish divergence, and I'm not seeing it. I am seeing some struggles with some resistance here. We've got some resistance here, but I'm not really seeing any bearish divergence. Okay, no bearish divergence, which I should be seeing, which I'm not. The market is healthy. So how do I interpret this? The daily is trending higher. The trend is healthy. So let's talk about what's happening on the daily in isolation. I'm teaching you analysis techniques here. We have higher highs in the MACD. Price is not that far away from the moving averages. Yes, it's bumping its head up against some price resistance, which I can see here, but there's no bearish divergence. So at this time, the trend on the daily is healthy and is not in any bad shape, which means that at this time, any setups we get here should be viable trade setups. I would definitely make sure I take some profit before we get back to this level, just to make sure that I have done that. Because what could happen is we could get here, struggle, come back down, and at that point we get, here we get a nice rejection candle, and we get a higher high, but we get a lower high, we get the bearish divergence, and we get the reversal. So I know that at some point in the future, I know we're going to run out of steam. I know the weekly is overextended. I know the monthly is overextended. So I do know that at some point we're going to get it, but the daily is telling me that the next time price comes back, this trend is healthy at this time. It's got ticks, green lights across the board. Therefore, the next trade setup should be fine. But that next trade setup might not hit a 3-to-1. It might, but it might not as well. So in other words, there is some risk at some point in the future, but for the next trade setup, it's fine. In other words, for the next entry signal, it should be fine, but I would definitely make sure that I am ready for price to start failing. What it could do, this is also a very real possibility, is it could go up, do a beautiful 3-to-1, pull back, do another 3-to-1, pull back, and then fail. And while it's going up, it does a lower high and a lower high and a lower high. So you're just getting complete bearish divergence, but it is still creating new highs. So I want you guys to understand that all I know now is that we're entering dangerous territory. We need to be careful. It doesn't mean we have to stop trading yet. There's still time to trade because we still have green lights. But I know from the weekly and the monthly, and I know from experience, that we are starting to push our luck a bit. So you can reduce your risk, but definitely just don't be surprised if price goes up and maybe there's a level here, maybe this level becomes a real level and it starts to cave after that. Hopefully that makes sense to you guys. Now the analysis is actually the same for the others. That's why we can go through this. The S&P 500 looking really good. I expect it to pull back here into this level, produce a nice trade setup, looks really good. The MACD looks fine. I'm not too worried about that. All of that looks good. It's the weekly and the monthlies that are starting to look a little bit overextended towards the top of the channel, but it can still go up here. The monthly also definitely starting to look a little bit more like this. So we're kind of, we're kind of in this area here somewhere where I would expect it to start to turn around. And there's 6,700. What's it? Where we go? 6.5. Somewhere around here we could have a level, which could be a nice round number where it just basically panics. So we could hit somewhere around here. So anywhere in those areas where we could ultimately, kind of reverse, and you can see how much room there could still be for end of day trades. So what we want to do is just trade cautiously, either trade less or trade the same, but just not be surprised in the coming months if we get a strong rejection. And if we really do, if it's a big one, which could take a couple of weeks, even a couple of months, we would then start to probably see a monthly correction. And that monthly correction would come back down again, back down towards kind of these highs in this area here. So we can kind of tell roughly how far that would come down. It would come down faster. So it comes down twice as fast as it goes up, which means that if it took 6 months to go up, it'll take 3 months to come down. That's just kind of the fear and panic. It's the way the markets work. Okay, so just be prepared for that, but we're not there yet. So same thing applies to the NASDAQ as well, which is also starting to create some fresh highs, starting to show a bit of divergence, little bit of divergence, so starting to show that the trend is becoming, but this is on the weekly. So again, that's weekly. That's like we've probably got till January or February, probably before that happens. We know we're going to come back down to these levels. Here's the monthly. That's going to put us around about here. Maybe as far as this, we can kind of see where we'll have a correction. Okay, so all of that is something to be aware of. If that happens, it's likely we'll see the UK kind of possibly stumble, but the UK just shows less growth. So I think we'll probably stay above this level. The DAX has been having some amazing performance lately. Beautiful breakout here. So breakout, possibly a come back and do a bit of a retest. Interesting to watch that. So all of those, we are looking good so far. You just keep trading them, but we're going to probably have a nice monthly correction at some point. Now, Hong Kong HK50, really like the look of this. I've been keeping a track on this for a very long time now. Over here, I've been talking about this. Again, that's a pattern from Spartan. We talk about that bullish divergence. We've got a nice double bottom here. Price has broken up, come back and retested it, and gone back up and retested it. So at this time, so far, we'll see. But my expectation is for this to continue back up to the upside so far. And China will be something similar. So that's why I say we might still see a move up before we see a bit of a correction. We're going to have to see. The markets are definitely running on quite a bit of juice at this time. The response just to the new, to the outcome of the election, meaning they now know who the next president's going to be. It doesn't really necessarily matter who, they just know that they know who it is. So the market's been quite responsive. All right, guys, let's go through the rest of the charts. So very quickly, let's have a look at euro dollar. Let's have a look at it on the monthly. On the monthly, we've just had this breakout of this range. It's really trying to get out of that range. It came back in, but it might try and continue to go down. We'll see. The weekly produced a swing low here. It's very messy. We've got a bullish candle. We broke the high. Then it was an indecision candle. So really what I'm looking for this week is going to be to see if price does indeed, we'll take the Fibonacci measurements, does price indeed come up to any of these three levels here? Okay, if it does, so we could see price come up and then continue down or work its way back into the range. So that is something I'm looking for this week, but there's no clear trend. We're still range bound at this time. Cable has got much more of a stronger uptrend like this, series of high lows. So I think there's a very fair chance we might see us produce a swing low. We might see this continue to head up a little bit higher. Let's see how that goes. Back up towards these highs here. Definitely a level at this point. And levels higher up. Let's see if we get a bit of a reaction off that. So at least initially, my expectation is to work its way up. It might reject it, so we might end the week lower, but I think there's still some potential movement to the upside. Aussie dollar looking interesting to me just because there's clearly a level of support here, but there's also clearly a range. We're producing a series of equal highs. There's a lot of pressure to the downside. We'll see how that ultimately turns out. We go to the weekly. It hasn't really tested this level yet, so we could still see a reaction this week. We could still see it come down, test it, and react. So very cautious about that because we still have a major level of support to get past. Kiwi dollar is also sitting at a key level over here. Kind of tried to break up above it, closed down below it, so we could see this head a little bit lower as well, so we could see it go down to those levels. So we're sitting at a very interesting point where that dollar might want to break out to keep going over the coming months. So I know this we could see 2025 could see a very strong dollar, but we're not there yet. We're right on that cliff edge, and it's been bobbing around there for a while. Dollar Swissy is stuck kind of right now, going more sort of sideways. And again, we've been talking a lot about the potential here for a change in trend, a double bottom. Possibility here, but in order for this to be confirmed, we have to break these highs, and this is on a monthly chart. So we've got that would have to be something that's still technically range bound here. We'll have to see what happens there. Dollar CAD is different. Dollar CAD has bucked the trend. There is no doubt in my mind that dollar CAD has broken out of its range. It definitely has more of a trend over here. So this is looking very interesting, but of course it's got its limitations. It's got a couple of those things happening there. So dollar CAD pairs could be very interesting to look for trades because they're moving. So quickly, let's look at Aussie CAD. Aussie's moving, CAD's moving, not really doing much here. Let's look at CAD Swissy. I'm looking for stuff. CAD Swissy testing level of support could be good. EuroCAD. EuroCAD not offering anything yet. Pound CAD. Pound CAD looking interesting from a monthly perspective, bit of a pullback there. Could be that it's looking to keep going. So Pound CAD might offer something that's got some resistance here, something to keep an eye on. Kiwi CAD. Okay, so there I am talking about how CAD, dollar CAD is moving, but the rest aren't moving. So forget about that for the crosses, but dollar CAD looking good. Let's look at dollar Sing. Dollar Sing here, range bound at the moment. I would say due for a correction. I would say we should have it come back down, but we'll see if that's going to be the case. Dollar Yen. Dollar Yen is similar to gold. It is stuck between this high and this low, and again, sort of this high. So if it breaks above that, you have an uptrend, and if it breaks below that, you have a downtrend. When we look at it from a monthly perspective, we have a very nice level of resistance here. Price rejected that. That looks good. We should normally, I would expect price to come down here. It's below the 150 level, which is where the Bank of Japan wants it to be. So I would normally expect it to come down from here. I want you to keep watching that. So basically, when we get to the weekly candle, I'm going to be looking for a break below the low here. If we break above this, look, if the market's going to uncertainty, the markets can do anything. So if the dollar doesn't know what it wants and the yen's not really moving, we could have anything happen. But, excuse me, if the markets are going to follow through on what they've set up with the monthly and the weekly, we should see a break below the low of here. We should see price starting to come around to the lows. And actually that applies to a lot of the yen pairs. A lot of them are showing the potential here for a move to the downside. Let's go to the daily. This is where I see most of the trade setups, guys, but there is some risk. Okay, so basically when we look at these, I see a lot of these have come back to support resistance levels and are producing bearish candles and a continuation to the downside. So there's a downtrend in play. We've got some levels, support here as a possible target, but I think break below this could be a signal to the downside. So pound yen, same thing again, produced a level of support and resistance where we here, sorry, there we go. Break below that, we could see a continuation lower. So we're going to have a look at all the yen pairs on the daily wave rider. So here that's looking like that wants to keep going. Let's look at Kiwi yen. Kiwi yen looking bearish. We've got CAD yen, which came into a level of support and resistance. Here looks really good. I really like the look of this one. Stop price above the high there. Entry below the low, targeting 3 to 1 or targeting taking some profit down here. That looks good. We've got Swissy yen. Also bearish rejection candle up here where it is. And possible move to the downside there. So Singapore yen as well, also possible setup here, stop loss above the high here, entry below the low, targeting this next level. So I'm cautious because there's a whole lot of trading opportunities across all the different pairs, but I like that. Let's just quickly look at that on the daily wave rider. So we're going to look at all the yen pairs on the daily wave rider to see if the daily wave rider is giving us sell signals. So we're going to look at dollar yen. So dollar yen, let's have a look. Excuse me. Okay, just waiting for this to. Okay, so no daily wave rider set up here, but it looks bearish here. So let's be cautious because that euro yen is not offering anything there yet. Pound yen, not offering anything there yet. Aussie yen, not there yet. The channels, so only the ones with the channels that are red as well should point to that. Interesting. Okay, so that means the risk is higher as well, but I've explained the sort of trade ideas to you guys, but I think the risk is higher. And that really only leaves us with the remaining pairs, which is we can run through Aussie pairs are all looking relatively weak after last week. They all moved a lot lower. So Aussie pairs could be great for daily wave rider. Aussie Sing, beautiful. If we could come back and retest this, Aussie Sing looking really good there. There we go. So the Aussie pair is probably offering the best setups on the daily wave rider. CAD Swissy. If it breaks below the low, we've got Euro Swissy. Let's see, nothing on Euro Swissy. Euro GBP is a mess. Euro Kiwi, possibly just again very choppy. Euro Sing, possibly a move to the upside. We might see that that's got a bit of a move. We'll see if that's going to be the case. It's tricky. That one's they're not super strong trends. They're kind of deciding what they're going to do. Pound Aussie. Pound Aussie again looking like it has the best trend setup. So Pound Aussie should be on the daily wave rider, should be nice and green. There we go. So it's nice and green. Okay, so it's shifting to the upside. So Pound Aussie, possibly Euro Aussie, CAD, what did I say? Sing Yen, or what was the other one? Aussie Sing. Some nice sells on that one. Pound Kiwi, maybe, but it's got a major level. It's got a breakthrough here. And then we've got Kiwi CAD, no clear trend, and Kiwi Swissy looking nice and bearish. Okay, there we go. So again, so basically to sum up here, we're pushing our luck a little bit with the global indices, but they are still bullish. They still look good on the daily. So we know that probably between now and January or February, we might slow down a bit and then get a bit of correction. So we just got to manage our trades, risk less or take profit sooner, or manage our stop loss. Just have a plan there in case we see a rejection when we get to major levels. Gold, we're trying to decide if it has to decide if it's going to keep going or if it's going to come down. Crude oil is looking good for a really nice breakdown to the downside. And then when we look at the cross pairs, a lot of the yen pairs have set up daily stuff on the daily that's not showing up in the daily wave rider, but could ultimately continue down. So we could see a really nice downtrend on the yen pairs in the new year. And then we've got a couple of individual charts, the Aussie and Kiwi pairs, because the Aussie is so weak. We've got a couple of Aussie and Kiwi pairs that are looking particularly good. And that is it. Ladies and gents, there's quite a bit going on. And hopefully between now and the new year, we get some good, decent opportunities there. But I hope all of that analysis made sense to you, and I will see you in the next Sunday market that I do. So thank you very much. There we go. And I actually didn't take too long today.